Anu, you get a chance to study some valuation or baggage related topics or exemption, anything you started now for a revision?
Only one exemption I started, that valuation I 2-3 days before I did.
Valuation, sorry, your voice is not clear.
I did it before 2-3 days, not now.
Okay, fine. But definitely from valuation or baggage, there will be a 7-mark question. Okay, I'll just start doing that recording. Fine. So in this December 24 question, we have gone through all the MCQ type questions. Now we will start with the other 7-mark questions. So you will get some idea about how the question paper So we will start now. So previously till the last class we have seen about these questions. So please, whenever any chapter you started preparing, please have a look at the back, the MCQ type questions, the same questions only, even in the exam also the two MCQs have been asked. So now this is section B. From this the 7-mark questions starts. So we will go one by one. In the meantime Rakesh may join. So state with the reason whether the following supplies are mixed or composite. Pointers. So this we have seen, right? So this is a composite supply, and Rajdhani train ticket, which includes meal, this is also a composite supply. Now the non-resident taxable person, with reference to GST law, define non-resident taxable person, analyze the provision relating to filing of returns by non-resident taxable person. So here the definition of non-resident taxable person, this line, there is no fixed place of business or residence in India. That line is very important. So the any person occasionally undertakes transactions involving supply of goods or services or both, whether as principal or agent in any other capacity, but no fixed place of business or residence in India. So you have to write this definition. Additionally, relating to filing of returns, we know it GSTR 5. So GSTR 5, you can see this will be very simple here. Monthly tax return has to be prescribed in form GSTR 5. So if we are a normal registered person, in that case, what are the two returns we file? GSTR 1, which shows statement of outward supplies, and GSTR 3B, in short we can call it as a summary return. What do you mean by summary return? You mention both outward supplies and ITC. So both are there, that we are calling it as a summary return. So this for non-resident taxable persons, he has to file GSTR 5 on monthly basis. So monthly by when it is due. So here it is nothing, you can see here, that is monthly tax return has been prescribed in form GSTR 5 for non-resident taxable person for every calendar month. The details of outward and inward supplies are incorporated in GSTR 5. Then last date of filing return. So remember always these three things, the provisions relating to filing of returns by NRTP. So first one, you know it, GSTR 5, and what is meant by last date of filing return. So even GSTR 5, what is the due date? Within 13 days after the end of calendar month. So you can have a look on this. That is, if March 2025 means within 13 days. That means 13th April he has to file GSTR 5. So same April, May, June, July until March, you can see it is 13th April, that is the due date, 13th of the succeeding month. So another line which is important here, or within 7 days after the last day of validity period of registration, or within 7 days after the last day of validity period of registration, whichever is earlier. So I have taken one example, you can have a look what is the meaning of within 7 days after the last day of validity period. You can see, suppose if I want to do a business like an NRTP, in that case I go for a registration and my date of registration is 27th January and my expiry date is, that registration expiry date is 23rd of March. So for 27th to 31st of March, my due date is 13th February. And for February month, what is the due date? 13th of March. So whenever my registration gets expired, it is on 23rd of March. So for the month of March, 1st to 23rd, before what date we need to file the return? So here the answer is 30th March. How 30th March? Because within 7 days after the last day of validity period of registration, whichever is earlier. So within 7 days means, so you can see it is 30th March. So the 30th March will fall within 13 days, within 7 days. Otherwise when it goes 13th April, so 13th April or within 7 days of the last date of registration, whichever is earlier, so it is 30th March. So this is the meaning for the last date of filing return. So payment of interest, penalty, fees or any other amount payable. So the NRTP should pay the tax, interest, penalty, fees under the GST till the last date of filing GSTR 5. So if anything is applicable, whatever tax, interest or the penalty fees, he has to till the last date he has to do all those payments. So these are the three important provisions relating to filing of returns. So remember, GSTR 5 monthly, it is a summary return. Second point, last date of filing return. So you get idea what is meant by last date of filing return, and whatever interest or penalty fees are applicable, and the NRTP has to bear those interest and fees. So this is okay. Here I get one example for NRTP related. So imagine a foreign software company provide cloud-based services to Indian customers. Company does not have an office or permanent establishment in India. It qualifies as an NRTP. Before supplying the services, it must register under GST and they have to pay advance tax based on estimated turnover and file monthly returns. So this I just kept for an example whom we call as an NRTP. We know it, he doesn't have any fixed place of business in India. So how a person without fixed place in India, he is liable to pay GST. So from this example, you will get some idea about the NRTP. And this you have to remember all recent in CA Inter, there is a question, what is the difference between casual taxable person and a normal taxable person? So I just wanted to share what is the difference as well. So you will also get idea about this, who is called a casual taxable person and a normal taxable person. So casual taxable person means who occasionally undertakes transactions involving supply of goods or services or both in the course or furtherance of business, whether as principal, agent or any other capacity in a state or union territory where he has no fixed place of business. So in where he has no fixed place means not like NRTP. NRTP will not have fixed place of business in India, but casual taxable person in a state or union territory where he has no fixed place of business. So this is the difference. So I am in Maharashtra. So if I am doing any transaction in Tamil Nadu, I don't have any fixed place of business. So I am a casual taxable person. So you can say he is a normal taxable person. So what is the, in the return related, what is the difference between casual taxable and non-resident taxable? So casual taxable means we are the normal taxable person. So what is the GST returns? GST are 1, the due date is 11th day of the succeeding month, and GST are 3B 20th of the succeeding month, on or before 20th of the month succeeding the month. So if the person is under opted for QRMP scheme, then he will be filing on 13th day. That is for GSTR 1. If it is GSTR 3B, 22nd or 24th of the succeeding quarter. So this is also quarter only. You need to for a casual taxable person, if you are writing, you have to mention for if the person opted for QRMP scheme, 13th day of such succeeding quarter. If for others it is 11th day. Same way GSTR 3B. So 3B we can say it is a summary return. So now we understood what is meant by summary return. Summary return means what? You show both your outward supplies and inward supplies. That we call it as a summary return. So here again GSTR 3B is nothing but a summary return. This is for a casual taxable person. Now we are seeing the difference between casual taxable person and a non-resident taxable person. So casual taxable person, he is a resident of India and he is a non-resident foreign entity or the individual. Fixed place has a fixed place at least one state and no fixed place of business anywhere in India. And the registration requirement must register before supplying goods or services in a new state, and he also must register before supplying in India. And the GST deposit, advance GST deposit is there, and he is also has to make an advance GST deposit, and there is a temporary registration is also there, that is also an extendable. So mandatory GST registration before commencing the business regardless of the turnover thresholds. So before we start our business, then based on our turnover, we should go for GST registration. So this is, if you see, I'm going back, you can see here question number 2, one is for composite or fixed, the other is for the definition and what is the provisions relating to filing of returns. Now we are moving on to question number 3. Discuss whether GST payable in the following independent cases. So this question is in one of the CS final exam. The same question has been asked, and we also in last December 24 the same question, except there is a minor change in the numbers. Apart from that, rest everything is same. So if you are studying GST, we can have a look on revision of all the question papers. That is very important. So if first thing we will start with this, discuss whether GST payable in following independent cases. So following independent cases means then we should remember about the exempted services. The first one yet to see, this first one is charitable trust. At least we have gone through this goods transport agency, and this is related to pure agent, like pure agent, and this is one pharmaceutical company supplies free samples to doctors. So we have to say, we have to answer whether GST payable in following independent cases. So we will start with the first one is Vishnu Temple Charitable Trust, registered under section 10 subsection 23C of Income Tax Act, gives on rent a community hall located within temple premises to public for organizing a Diwali Mela, and the rent charged is 9,550. So they are giving rent, the community hall, and the location of the community hall is within temple premises, and it is to the public for organizing a Diwali Mela, and the rent here is 9,550. So we will complete this charitable trust. So the services, this is the first one, entry number 1, the services related to charitable and religious activities. So the any services registered under section 12AA or 12B and of Income Tax Act by way of charitable activities, they are exempted from GST. Those services are exempted. So now is the in a brief, what are the services? The services by a person by way of conduct of any religious ceremony. So the person is going for the marriage function like pujari and the temple, some other functions, and if he is earning, then those services are exempt from GST. And the renting of presence of a religious place meant for general public, owned or managed by an entity registered as a charitable or religious trust, registered under section 1023C of Income Tax Act, or a body covered under section 23BBA. However, nothing contained in this exemption shall apply to renting of rooms, renting of premises. Renting of rooms charges 1,000 or more per day. That means the exemption, nothing contained in entry number B of this exemption, but it shall apply to under what circumstances you will the GST is applicable. So if they are renting room, and the renting of room, if the charges are 1,000 or more per day, then it is taxable. And the renting of premises, community halls, kalyana mandapam or open area and the like, where charges are 10,000 or more per day. And last one, renting of shops or other spaces for business or commerce, and the charges 10,000 or more per month. So there is a difference, renting of premises and the renting of shops, and the rooms it is 1,000. In our question, they are renting what? Community hall. So community hall is, you can see here, community hall, and the rent charged is 9,550. And for community hall, the charges 10,000 or more only taxable, but in our case it is 9,550. Hence it is the exemption, that is, this exemption does not apply where the renting charges of premises or open area or rupees 10,000 or more per day. So only if it is more than 10,000, then it is we are liable to pay GST. Ours is less than 10,000 per day. So hence no, this is exempted services. The same question you can see, I have taken from the referred the CS also. There is no any, not even the numbers also not changed. I think it is 9,550 and here it is 9,500. So the renting of community hall is exempt from GST as the rent is less than 10,000 per day. So that will be your answer. Rest others are, you can mention the exempted notification number, the said service wholly exempt from GST. So first line you should be mentioning it correctly. So we move on to the next one. A company secretary makes payment of LLP registration fees 4,000 on behalf of their clients and charges the client his professional fee 16,000 along with the expenses 4,000 incurred in the form of payment to registrar of companies, whether GST would be payable. So in the valuation of supply, that time we have seen about pure agent. So pure agent means one important point which we need to remember is the second one. the payment made by the pure agent on behalf of the recipient of supply has been separately indicated in the invoice issued by the pure agent to the recipient of service. So we have seen this example as well. Here this agency income and the traveling expenses, hotel expenses, this will be the taxable supply. Rest, customs duty and dock dues will be the pure agent reimbursement. So the first three will be the taxable supply of pure agent, that is in the hands of customs broker. So only 10,500 and 9,000, which is 25,000. This I am showing only for example to recollect. I am going to the problem back. So you can see, read this question again. The company secretary makes payment of LLP registration fees 4,000 on behalf of their clients. That means this is the pure agent expenditure. So the pure agent, reimbursement it is. So the 4,000 is pure agent reimbursement. What is the taxable supply then? It is only 6,000 plus 4,000. So the on behalf of the clients means it is the reimbursement. And what is the taxable his supply of service? 16,000 plus 4,000. So you can see how to present. You can have a look. You also the problem. This is also all these 4 questions are from CS. You can see how to present it. The rule 33 provides the numbers only different. There we are seeing 4,000, 16,000 and 4,000, and here you see 3,000, 15,000 and 3,000. So how we need to present the expenditure or cost, which is rule 33. Expenditure or cost incurred by pure agent shall be excluded from the value of supply. In view of the same, GST is payable only on 15,000 and 3,000, only on 15,000 and not on rupees 3,000 which were paid by him while acting as a pure agent. So 15,000 along with rupees 3,000. So it is including the 3,000. So you have to see his taxable is only on 15 and not on this 3. 3 is what? On behalf of their clients. So this is a pure agent reimbursement. So third question, it is pharmaceutical company supplies free samples to doctors. So free samples to doctors. What we are actually we needed to find from this question, whether GST would be payable in following independent cases. A pharmaceutical company supplies pure free samples to doctors. So if I am the owner of pharmaceutical company, I supplied some free samples, I gave some free samples to doctors. So whether on my free samples am I liable to pay GST? So we are going back to the pharmaceutical free samples. So free samples means where it will get captured. So I am giving some free samples to doctors. That means I don't receive consideration. So activities to be treated as supply even if made without consideration. You should recollect this schedule 1. Under this schedule 1, which point should come to your mind? That is point number 2, that supply of goods or services or both between related persons or between distinct persons. whether when made in the course or furtherance of business. So you call it as a supply. But in our case, the pharmaceutical company is supplying to doctors. Whether he is a related person or whether he is a distinct person, in neither he is a related nor a distinct. So you cannot consider this as a supply. If you don't treat it as a supply, then you are not liable to pay GST. So you can see this answer also. Schedule 1 specific activities made without consideration, supply made without consideration to unrelated person will not be treated as a supply. Therefore, GST will not be levied on free samples distributed because it is not considered as a supply. ITC on such purchases are not allowed to the supplier. So say for example, I am the owner of the pharmaceutical company. Even I am not eligible to avail the input tax credit. So my doctor to whom I am giving the free samples, it is not a supply, so I am not liable to pay GST. In both way, ITC also I am not eligible to avail, and the GST also I am not liable to pay. So this is the third one. Pharmaceutical company supplies free samples to doctors. So we are going to the last one. RTY Limited has given on hire 12 trucks to ABB Transporters of Mumbai, a goods transport agency for transporting goods in various parts of the country. The hiring charges 10,250 per truck per day. So where we can recollect, this is related to exempted services. So under exempted services, this is goods transport agency, or you can say services by way of giving on hire. Actually, I remember we have seen about 18 or 19, I think 18, 21, 21A, 21B. So this one is entry number 22. So why we are considering entry number 2? Services by way of giving on hire. So say for example, I am doing some service business. What type of business? If I am giving some services on hire basis, like rental basis. So here RTY Limited has given on hire 12 trucks to ABB Transporters, given on hire. So by services by way of giving on hire, to whom they are giving, that is very important. To a state transport undertaking, a motor vehicle meant to carry more than 12 passengers, or services by way of giving on hire to a local authority, an electrically operated vehicle meant to carry more than 12 passengers, or to a goods transport agency, a means of transportation of goods. So our question here is what? RTY given on hire 12 trucks. To whom they are giving? To ABB Transporters. Who is ABB Transporter? A goods transport agency. So in this is getting covered here. The services by way of giving on hire to a goods transport agency, a means of transportation of goods. So in that scenario, it is to be treated as an exempted services. In view of the above, GST is not payable in case of hiring of trucks to actually this I copied from this answer. So it is here the Jaggi transporters. Here we need to mention to ABV transporters. Services by way of giving on hire. Entry number 22. So see, there is with the effect from 2018, if the services to the motor vehicle for transport of students, faculty and staff to a person providing services of transportation of students, faculty, staff to an educational institution by way of preschool education and education up to higher secondary school. In that case only it is should be treated as an exempted services. So educational institution means not for everything. So educational institution by way of preschool and education up to higher secondary school only. So this we have seen about this electrically operated vehicle. So it is related to that e-commerce one. So we need to revise everything, all those questions. So if we are if we understood some concepts, we can take some questions and we will start revising. We will do it regularly. So you will not get that stress or you will not feel scared of the exams also. So these are the 4 questions. You can see it has come for 7 marks. So that is one is the charitable trust. Entry number 13 you need to refer, and this is the normal one which is related to pure agent services. This also we have entry number, but I did not capture over there. And we have pharmaceutical company, that is free samples to doctors. That means you should remember about the schedule 1. So you can see there is a small difference only in this pharmaceutical example. In this pharmaceutical, which one is between related or distinct persons when made in the course or furtherance of business, even without consideration will be treated as a supply. But here the service provided to an unrelated person, so will not be treated as a supply. Okay, fine. Now we will see the second question we have covered. This is the third one. In under third one you can see this is question number A. Now we are moving on to the B. So B1 is related to, you can see here, SST Limited, a registered person under GST law at Ahmedabad. The following goods in the procured the following goods in the month of October 23. So the inputs used for the manufacture of final product 35,000, goods destroyed due to natural calamities, and food and beverages in dealers meat, then food and beverages for purchased for employees during office hours, goods used for setting up telecommunication towers, immovable property, then account paper for photocopying machine used in administrative office, goods used for providing services during warranty period. So these are the different purchases are there. Okay, so now what we need to calculate? Input tax credit. So for each transaction the SST Limited paid, and they have GST also. So GST paid is 35,000. So whether you can treat it as your input tax credit, Yes, because we purchased this input for the manufacture of final product. So 35,000 which is eligible to avail input tax credit, and there is a goods destroyed due to natural calamities, but we have paid GST 8,000 and the goods got destroyed. So in that case, whether 8,000 where you paid GST, are you eligible to avail input tax credit? So which one we need to refer in that case? I am sharing my screen. P19, what is this? 17 subsection 5. So our input tax credit, section 17 subsection 5. Section 17 subsection 5 is says what? Not applicable. ITC not applicable goods and services. So here you can see here goods lost, stolen, destroyed, written off, gifted or free samples. So in that case you are not eligible to avail ITC. So goods destroyed due to natural calamities 8,000. So whether you will consider? No. Food and beverages used in dealers meet. Food and beverages, goods or services provided in relation to food and beverages, outdoor catering, beauty treatment. So in that case you are not eligible to avail input tax credit. Then food and beverages purchased for employees during office hours. So okay, for employees some lunch, dinner we purchased. So that is during office hours. So GST paid 5,000, but still you are not eligible to avail the ITC. Then fifth one, for setting up goods we purchased for setting up telecommunication towers being immovable property. So which one you need to remember in that case? The definition of plant and machinery. Plant and machinery means apparatus, equipment and machinery fixed to earth by foundation or structural support for making outward supply of goods or services or both, and includes foundation and structural supports, but exclude. So what are the items that exclude? Land, building or civil structures, telecommunication towers, pipelines laid outside the factory premises. So refer D, the goods, services or both received by taxable person for construction of an immovable property on his own account, including goods, services or both used in the course or furtherance of business, you are not eligible to avail ITC. ITC is not allowed. So going back here, you can see the goods purchased, it is for setting up of telecommunication towers being immovable property. So you are not eligible to avail this GST, but you can consider, you can capitalize it and you can go for claiming depreciation. So the next one is account paper. Okay, so you are in a company and company purchases some A4 sheet papers and pen, pencil, some stationery items. So whether we take IT's you pay GST, but whether you claim that GST, whether you treat it as an ITC, so these are stationery items which you are not using it for the manufacture of final product. Only the material which we are using for the manufacture of final product, or you can say use in the production. In that case only you are eligible to avail ITC. The next one is, the last one, goods used for providing services during warranty period. So you purchase the goods and you are using it when the goods has come during the warranty period. Yes, you can claim the ITC. So how you have to present in the question what it has been asked, amount of ITC available with SST for the month of October. Assume all the other conditions necessary. By giving necessary explanations, all the other conditions for availing have been fulfilled. So you have mention all this, and you have to see whether they are eligible to avail ITC. You can say, well, yes, it is eligible. And why it is eligible? We can use it in the course or furtherance of business. Same way wherever ineligible, so you have to say these are blocked credits. That means ITC is not allowed. So that is for destroyed, goods destroyed, and food and beverages. These are like entertainment expenses. And this one is employee welfare it is. And immovable property, you need to remember section 17(5) para D. So blocked credits. So last one is, it is office stationery items, so you are not eligible to avail ITC. Then seventh one is, it is during warranty period. So in that case you are eligible to avail the ITC. So 47,000. So this one is related to the question number 3 and B. You can see this has come for 7 marks, and even the previous problem is also for 7. So all these 4 questions where we have seen that pharmaceutical, this pure agent, and this charitable exempted services, this is for 7 marks. So in the, if we are okay with this, then we can easily score in this last 4 question itself 28 marks. So for warranty I kept this example. So this example you can remember. Suppose if you forget something, the sale of washing machine is 30,000, and this 30,000 include some warranty related service cost. The manufacturer provides warranty repairs or replacement part during the warranty period without charging customer any additional consideration. So without consideration I am giving the supply. The manufacturer incurred 5,000 rupees on warranty related services. So I replaced some of the part. So for the part cost is 5,000. The service which I provided for the replacement is 5,000. The ITC claimed on 5,000 remain unaffected, and you don't want to reverse it. So what does this line mean? The ITC claimed on rupees 5,000 cost of warranty related services remains unaffected means what? Say for example, I purchased some warranty related parts in the month of March. So against that purchase, I claimed ITC. Against that purchase, I claimed input tax credit. And in the month of May, from one of the customer, I received the finished goods. Say for example, this washing machine only. The customer returns the washing machine, and due to some issue, part got damaged. So I replaced the part which I purchased in the month of March in the month of May. So I replaced it and sent the material back to the customer. Do I receive any consideration? No. But I provided this warranty related services. So whether I need to reverse the ITC? No, I am not eligible to reverse not required to reverse the ITC, because that portion of cost we have already considered in our sales price. So it is inclusive of likely warranty related service cost. So whenever we buy some electronical equipments or whatever purchases we are doing, say laptop, mobile or household appliances, something, the sales price, say for example an air cooler cost is 40,000. In that 40,000, the manufacturer definitely would have added some percentage of warranty. So that's why when the material comes for warranty basis, we are not reversing the ITC, though we are providing the services without consideration. So that point we need to be very careful and clear. So the cost of warranty related, since it is not treated as an exempted supply. Okay. So that's why we have considered as an eligible here. So this is a very easy problem. So if we remember section 17 subsection 5, so you have, it is a very simple, only 35 and 12, rest all are not eligible. ITC is not allowed. So next you can see we are in the fourth question now. Fourth question is, every person, I will come back to this TDS. We will go to our institute material for the TDS related, and we have look on this time of supply. Write short note with reference to time of supply under RCM, reverse charge mechanism, in case of supply of goods, supply of service. So time of supply, when we studied, you can see the mark, it is for 7 marks here. So time of supply in case of reverse charge. So both we need to mention, supply of goods, supply of services. So section 12 is supply of goods, 13 is supply of services. Section 12 subsection 3. So section 13 subsection 3. So what you need to remember here, what are the 3 items whichever is earlier. So if it is goods, date of receipt of goods, date of payment entered in the books of account of the recipient, or date payment is debited in bank account, whichever is earlier, and the date immediately following 30 days from the date of issue of invoice by the supplier. In all these 3 scenarios, whichever is earlier is the time of supply. This is for goods. If it is for services, in that case we are dividing it to 2. One is associated enterprises, supplier of service located outside India. In that case you need to follow this date of entry in the books of account of the recipient, or date of payment whichever is earlier. In other scenarios, date of payment or date immediately following 60 days from the date of issue of invoice by the supplier. So this is very important. So in other exams also this has been asked. You read it and write, spend some time writing also, so you will know how much you remembered. So whenever you study this, please try writing in your note and see whether you are able to recollect. We will see some examples also. So this you need to write, not required the presentation, but you can present it like supply of goods, point number 1, the date of receipt of goods, point number 2, date of payment entered in the book. What is the difference between these two? The date of payment as entered in the books of account, date of payment is debited in his bank account, whichever is earlier. What is the difference? It is the first one says, so you confirmed me that you are going to make a payment of 10,000 today. So I did not check in my bank whether the amount is debited or not. Directly I am going and making the entry in my books that I received of rupees 10,000 from ABC, and I booked that entry also. And one scenario is that, and the second one is date on which payment is debited in his bank account, but actually the 10,000 I received from you tomorrow 17th of May only. So whichever is earlier means when I considered in my books of account is the 16th today, so that is the date of payment, whichever is earlier. The last one is date immediately following 30 days from the date of issue of invoice by the supplier. So this is for goods and this one is for services. So you need to try writing also. See, this is question number 4B, and this one is theory. We will see question number 4A separately. Before that, in last year, last Sunday class, if you remember, please recollect the question. Mr. Kishan, and you see fourth one, question number 4 is for 2. Okay, question number A and B. B we have seen RCM. For time being we will keep aside this GST TDS. This is also very simple only. I will explain you this question number 4A. Now we are moving into 5. 5 is, this is 5B. 5A I have, no. So this is question number 5B. So this we have seen in this last Sunday, the intermediate class. So the very easy one, air travel agent. So we have seen the supplies, specific supplies it is related to. So there are 5 heads. One is the money exchange, the foreign currency we have seen. The second one is air travel, and other 3 are like the pure agent and other currency, I think, foreign exchange. We have seen 5 are major specific supplies. In that, the second one, air travel related we have seen. So in this air travel, basic airfare collected for international booking of tickets, basic airfare domestic booking of tickets, commission received from airlines on sale of domestic and international tickets, year-ending bonus received from airlines, compute GST liability of Mr. Kishan, an air travel agent, for the quarter ended March 24. In the above case, would the GST liability be reduced if he opts for the special provision? So there is a special, these are specific claims are there. Special provision for payment of GST 32 sub rule 32 sub rule 3. So I'll just for recollect, I'm opening. If I share you this, it will be very easy. Documents, data. Just see this picture. You can recollect in our last Sunday class. So we saw specific valuation method for 5 supplies. Rule 32. One is say purchase or sale of foreign currency, booking of tickets for air travel by an air travel agent, life insurance business, second hand goods, supply of second hand goods. The last one is redeemable vouchers, the last one is redeemable vouchers stamps. So in this Sunday we have seen rule 32 for the specific valuation methods. So if you remember, we have seen some of the examples also, like under section 32, 32.2 and 32.3, if this is for the money exchange service, and this we have seen it for the air travel ticket. 32.3 it is, and 32.4 is insurance, and if you remember, 32.4 is insurance, and 32.5 is buying and selling of second hand goods, and the last one is related to the redeemable, that is for the vouchers, redeemable one. See, time where I can show you this. So now we are into this air travel agent. So I am sharing just you need to remember the last in this Sunday when we have discussed. So how we are going to present this problem? So the same problem, I think I need to close this slide share. So you see now in this problem what has been asked in the above case, would the GST liability of Mr. Kishan be reduced if he opts for the special provision? So how we will be doing if we want to calculate the GST liability? So what is the normal income of this air travel agent, and what is as per rule 32 sub rule 3. So in that way we need to do two different ways. See this only the numbers are changed. This is from our material only. You can see the basic airfare, domestic, international, commission received from the airlines, year ending bonus, and Mr. A be reduced if he opts for the special provision 32 sub rule 3. The same question in December 24 also. So now how this problem has been calculated, we'll see. Okay. Before that, I'll share our study material. So once you need to have a look on this international booking. You can see. As per rule 32 sub rule 3 of CGST permits air travel agent to discharge GST at fixed percentage of basic fare and on commission, on which commission is normally paid by the airlines. In such case, the effective value and the effective rate of GST is below. That is, domestic booking, value of taxable supplies 5% of basic fare. If it is an international booking, 10% of basic fare. Air travel agent has to pay 18% on the value of taxable supplies. Air travel agent can pay tax under any of the two options. So GST at a fixed percentage in normally paid, or we can go with this taxable supplies. Any of the two options. The rules do not bind the travel agent to opt for any of the options. So now you can see this example, how they have calculated. What is the first method? Commission received from the airlines 4,50,000 and year ending bonus 50,000. So what is the total? 5 lakhs. On 5 lakhs 18% is 90,000. Now we are following rule 32 sub rule 3. How we are calculating? Basic airfare. On basic airfare, domestic booking is 5%. So on 50 lakhs 5%, and basic airfare international booking. So international booking is 10%. So it on 80 lakhs 10% is 8 lakhs. Then total taxable supply 10,80,000. So what is the GST liability? 1,89,000. The GST liability as per normal commission. If you are going with your normally, how will want to calculate your GST liability without the rules, then it will be 90,000. If you opt for rule 32 sub rule 3, then you are liable to pay GST of 1,89,000. So from as a professional, we have to say, like to the air travel agent, that you should instead of go with the rule, you can follow the normal one, so that there you can see you save your GST payable. Same problem here. So we can see how to present. So the statement showing GST liability of Mr. A. So sorry, here Mr. Kishan. So we need to mention Mr. Kishan. this is the normal method. This is as per rule 32 sub rule 3. So if you are following normal method, the normal method domestic and international is 4,95,000 and 30,000. So okay, 1 minute, let me change so it will be easy. Is 4,95,000 and 30,000 it is. So here 65 and 53. $65,000 and 53. 65, 53. If you see here, sometimes we may miss if you write like this. So you can compare it easily, like if you go with your normal provision. So we consider commission received from airlines. So the domestic and international this much commission, and you have year-end bonus which is 30,000. So 90 which comes to 5,25,000. This is your taxable supply of services. I think one row up. So this 5,25,000 and 8,55,000 is our taxable supply of services. On that GST liability of 18% if you calculate 94,500, and here it comes 1,53,900. So which is economical then? So when you follow the normal one, which is economical, because the GST liability is less as compared to following rule 32 sub rule 3. So this is only the answer, and the it is for 7 marks. So very simple it is. So these types of, instead of going into more complicated and taking lot of time, quickly whatever you can do the revision, will do it. Okay, so only 65 and 53 will be as per rule 32 sub rule 3. This commission received from airlines and year ending bonus, this will be the normal one. So what rule 32 sub rule 3 says, for the domestic you should consider the basic airfare 5%, and for international you need to consider 10%. So you can refer our material as well. See, air travel agent, you get 5% on basic fare, and you get 10% for international bookings as a value of taxable supplies. So if we are an air travel agent, what we normally consider, whatever commission we received and whatever bonus we received, so that will come capture under our normal, and this is as per rule 32 sub rule 3. So you find this taxable supply of services, and then we are calculating the GST. So we are saying you opt to the normal method, so that is more economical as compared to rule 32 sub rule 3. So this is for the I will share the question paper also. So we have seen now, see section B. So we have seen question number 2. So question number 2, this is a composite and mixed supply. The question is from, we need to find whether it is a composite or a mixed supply. If you are thorough with this composite and mixed supply, you can score good in this. And then non-resident taxable person and the provision relating to filing of returns. So who is called a non-resident taxable person? No fixed place of business in India. He is a non-resident taxable person. So what provisions relating to filing of returns? Then you need to remember 3 things: GST are filed and the last date of filing of return, and if there is any interest, penalty or any fees are there, then you have to pay within the validity period. Then that is related to non-resident taxable person. Then we have GST. They discuss whether GST would be payable. So these are coming from the exempted services. So these four is for 7 marks only. Okay. So this also very simple one. And we have seen this input tax credit. So out of this 7 line items, which one you are not eligible to avail the input tax credit? So first one, we are very pretty clear that all the raw materials which are used for the manufacture of final product, we are eligible to avail the input tax credit. Rest others, goods destroyed due to natural calamities, food and beverages, telecommunication towers and account paper. So food and beverages in the dealer's meet, these are entertainment expenses, these are employee welfare, and telecommunication towers, and it is, you should remember the plant and the machinery definition for this telecommunication towers. So the account paper for photocopying machine, meaning, so in your company, if you are buying any stationery items, are you taking the ITC? So it is not directly related to production, so you will not avail the input tax credit. The same only in a different way they have given, like account paper for photocopying machine used in administrative office. So you are not eligible to avail the ITC. And the goods used for providing services during warranty period. So you are eligible to claim the ITC. So this is, you see, this is also for 7 marks. And we have seen the time of supply under RCM. So that you need to remember this. Time of supply. So you need to have the writing practice also for these 3 items. So whichever is earlier, that we need to mention for the time of supply. So the next one is this will give you, we'll see 5 tomorrow, and 5B. So now we have seen. So you, this is also for 7. So this simple questions you can complete in even in exams also, like 5 to 10 minutes. That's all maximum. And we have seen foreign trade policy. This is related to the theory area. So In foreign trade policy, the schemes, again we will see, repeat it tomorrow also. What are the advance authorization scheme, DFIA, duty free import authorization scheme, and this is the SEZ and EOU, special economic zone and export oriented units. So these are the repeated questions. We'll see e-invoicing. See again, advance authorization scheme, eligibility of advance authorization scheme. So we'll see this one. Before this, we are into the 4 subsection. This A. What is? Every person registered under GST law is required to deduct TDS under section 51 of CGST Act 2017. Comment on the validity of the above statement and discuss the relevant provisions. Okay, this how we have to present. You look, this question is something different or complicated, so it is not like that. We can take it in a simple how to present. So in the question, what they are saying here, every person registered under GST law required to deduct TDS. Okay, so I am registered under GST. So whatever invoices I receive, so I deduct some 2%, 10%, some TDS amount, and the balance amount only I release to my supplier. So who is eligible to deduct TDS? So if this is under GST law, okay. So there is a other TDS is there, but this that is you can see it in the direct tax. This TDS is what? The concept of TDS is one of the way collect tax based on certain percentages on the amount payable by receiver. We have seen in our returns GSTR 7. So the person who is deducting the TDS, they have to file GSTR 7. So this section which you are seeing, section 51, it is related to the GSTR 7 related. So in the question it is given like, every person registered is required to deduct TDS? No. Who could be eligible to deduct the TDS under GST law? A department or an establishment of central or state government. Okay, so tomorrow you have started your own company, manufacturing company, and you are selling it to some government department or some government establishment. In that case, then they make payment to you. In that time, they deduct the TDS. So this is the, okay, say for example, you supplied goods worth some 2 lakhs. So whether they deduct TDS on 2 lakhs, so that things we will be seeing. Now you understand who will be deducting the TDS. So if you are, tomorrow if you are going to supply to some ABC private limited, so they will not deduct your TDS. Same if you are supplying to any department or establishment of central or state government, their TDS, they will deduct the TDS. So the department or establishment of central or state government or local authority, government agencies, authority or a board of any body, any other body set up by an act of parliament or state legislature or establishment by any government. 51% or more participation by way of equity or control carry out any function, or a society established by the central or state government or local authority society registered under Societies Registration Act, public sector undertakings. A to F, you need to remember now. So because otherwise here when they say every person registered under GST law required to deduct means, then we misunderstood. Yes, every person will deduct the TDS, but the section says who is liable to deduct the TDS. So tomorrow when you are making a supply to this department or establishment or central government or any local authority or government agencies or the board set up by an act of parliament or any government establishment with 51% or more participation of the society which is registered under Societies Registration Act or the public sector undertakings. So when you make a supply to these establishments, then when they are releasing you the payment, there they deduct the TDS. But when you are supplying for 2 lakh, 1 lakh, are they going to deduct? So there we know, we should know the limit, threshold limit, within what limit they deduct, or if you cross the threshold limit, are you eligible? That we will understand. Here one more new term you need to remember here is the above category persons, also called as drawing and disbursement officers, DDOs, who are required to deduct tax in accordance with the provisions of GST laws. So this is the new term you might have not come across. They are called DDOs. So the above category of persons are called DDO, drawing and disbursement officers. Okay. So here TDS under section 51, and with these establishments, if you have a contract value greater than 2.5 lakhs, then they are eligible to deduct the TDS. So your contract value is greater than 2.5 lakhs. So if no, then straightly you can see no TDS. If your contract value greater than 2.5 lakhs, no TDS. Yes means the second thing what you need to check, whether the recipient is DDO. So DDO means who? From A to F. So you have a contract value with the recipient who are DDOs. Okay, so if you have a contract value with XYZ Private Limited, whether they are DDO? No, they are not DDO. Who are DDO? These establishments like government, parliament, Society Registration Act. So they are called DDOs. So tomorrow if you are making if you are agreeing the contract value which is greater than 2.5 lakhs, next thing you need to check is whether the recipient is DDO. He is not a DDO. So no TDS. If he is a DDO, what do you need to check? Next option need to check here is DDO belongs to the supplier state. Belongs to the supplier state. Yes, then you are eligible for TDS. So it belongs to the supplier state. No. Then what will the next option to check? DDO and place of supply is in the same state. If no, then no TDS. If yes, then TDS is applicable. So these two things will be little bit different, but if you see this example, it will be very simple one. So what we have seen here, DDO is disbursement and drawing and disbursement officers. If the DDO belong to the supplier state, yes, then you are eligible for TDS. That means tomorrow when they are going to make you the payment, they will deduct the TDS. So first option is clear, like DDO belongs to the supplier state. We will see this example. So you will be having a good clarity here. Government of AP, Andhra Pradesh purchases taxable goods from a local supplier. So DDO belongs to the supplier state. So government of Andhra Pradesh purchases taxable goods from a local supplier. Yes, see Andhra Pradesh and the state of registration. So TDS deduction is applicable. Next one, government of Tamil Nadu engages a contractor of Tamil Nadu for renovation of Tamil Nadu Bhavan, which is in New Delhi. So the location of supplier, New Delhi. The location of supplier, Tamil Nadu. The place of supply is New Delhi. So the DDO belong to the supplier state. The DDO is the Tamil Nadu. So the supplier is in New Delhi. But the second thing, the place of supply if is in the same state. The place of supply if it is in the same state. So here the place of supply is New Delhi, but where they are engaging, the government of Tamil Nadu, they engage as a contractor of Tamil Nadu. So the DDO and belongs to the supplier state. So the engage as a contractor of Tamil Nadu only. So the both them are in the same state. So in that case TDS is applicable. So which point we need to remember? DDO belongs to the supplier state. The contractor is from Tamil Nadu. Engages a contractor of Tamil Nadu for renovation of Tamil Nadu Bhavan in New Delhi. There are three things are there in the single transaction. So that's why you need to see it carefully. Then the third scenario, government of Punjab purchases taxable goods from supplier in New Delhi. So the location of supplier is New Delhi. Place of supply is Punjab. So the place of supply DDO and the place of supply is in the same state. So DDO which place here? Government of Punjab. Place of supply Punjab. So the TDS is applicable. Then last scenario, government of Andhra Pradesh engages contractor of New Delhi renovation of Andhra Pradesh Bhavan in New Delhi. See the second and the last one. So he engages a contractor of Tamil Nadu. So that means DDO belongs to the supplier state. Here whether he is belong to the supplier state, government of Andhra Pradesh engages contractor. So he is from New Delhi. So the location of supplier is New Delhi, which is different. So no. So here you need to see no. Then what condition we need to check? DDO and place of supply. So the place of supply is in the same state? No, the place of supply is not in the same state. So no TDS. So this way we needed to see. So the second and fourth you should be seeing it carefully. Second one is DDO belongs to the supplier state. DDO who here? Tamil Nadu. Supplier state is location of supplier which state? Tamil Nadu. So DDO also Tamil Nadu, location of supplier is also Tamil Nadu, so TDS is applicable. So see here, we have to come to this conclusion here, TDS is applicable. So then location of place of DDO here, Andhra Pradesh, location of supplier, New Delhi. So that condition not satisfied, but still you have one more condition is there, that is what place of supply. Location of the DDO is Andhra Pradesh, place of supply is New Delhi, hence TDS is not applicable. Suppose government of Andhra Pradesh and place of supply is also Andhra Pradesh, then in that case you have TDS applicable. So these are the TDS section 51. So this question has come for 7 marks, but not required this, but at least you should know from A to F. So always the central, state government will get, you will be remembering central government, state government, local authority, government agencies, board set up by an act of parliament, established by any government, 51%. Still this very easy. Then only thing you need to remember is the society. Society registered under Societies Registration Act and the public sector undertakings. So these are the main one, and you need to say these are called drawing and disbursement officers. The above category persons also called drawing and disbursement officers. Then you need to see here the contract value greater than 2.5 lakhs. Then you will have to come step by step. This is not complicated, this is very easy only. So you need to remember two things only. DDO, supplier state, same state or not. DDO, place of supply, same state or not. Only these two you need to remember, that's all. So this has come for 7 marks. So please we'll see simple questions again. I think we will stop till here because he has to leave early and lock his last bus is at 8:30. So here in the reception who is waiting to lock has to leave early now. So we'll stop till here, and tomorrow we will continue the rest of December 20. I think in 15-20 minutes we will be able to complete the other questions also, and then we will start looking into December 23, and we will see what is that e-invoice, TCS, TDS. These don't require much time. So along with our question paper revision, we will start doing that as well. This also we have it for demand, or these are coming under this demand separate chapter. So we'll quickly see those important points from this chapter. So we'll stop till here and we will continue tomorrow 6:30. Thank you. Any doubt or anything when you are revising, I'm available. You can drop me a message. So in our class or even immediately we can connect and we will resolve the solutions. Thank you. Thank you, Anu. Thank you, Rakesh. Bye. Good night.